everybody needs to understand that there are alternative ways to invest. I don't care if it's the stock market, it's Bitcoin, it's foreign currency, it's collecting stamps, buying gold. This is the idea of opening up your mind and planting a seed of saying, hey, this is on the roster of the availability for you to consider as a method for you to invest.
Welcome to the Marketing Boost Solutions Podcast. Join host Marco Torres, along with expert guests, as they deliver incredible, proven solutions to your marketing challenges in each power-packed episode.
Welcome back to another exciting episode of the Marketing Boost Solutions Podcast. Today we have a truly inspiring guest who has been making waves in the world of real estate investing. Tiffany Alexander began her journey in real estate back in 2006, exploring strategies like short sales, tax liens, and flipping multifamily properties. Over the past 7 years, she has honed her expertise in the niche of promissory note investing, helping over 1,000 people achieve their investment goals. Tiffany's deep knowledge and innovative strategies have positioned her as a leader in the field, maximizing gains for both herself and her clients. But her success doesn't stop at the professional level. She's also a dedicated wife and a mother of 2 vibrant daughters, striving to raise them as impactful members of society alongside her husband, John. So get ready to dive with me into a wealth of knowledge as Tiffany shares her journey, the secrets behind her success, and how you too can find amazing opportunities in the world of real estate and note investing. Hello, Tiffany. Welcome to the show.
Thank you. I'm excited to be here.
Oh, man, I'm excited to have you. This has been a subject that I like. I'm a real estate investor myself, but I've never invested in promissory notes. So I'm all ears to learn today. And if you're a Marketing Boost entrepreneur listening to this show, guys, it's part of the millionaire mentality. You got to be thinking, when I make a bunch of money, what am I going to do with it? How am I going to invest it? How am I going to make my dollars go work for me while I make money while I sleep? And that's what Tiffany has helped over 1,000 people now do. So, Tiffany, tell us a little bit about your story. What first inspired you to dive into the real estate investing back in 2006, and how has your approach evolved over the years?
Oh, I love that. My you could say my inspiration was trying to do something different. When you go from job to job to job after dropping out of college. Now, I thought my whole life I was going to be an astronaut, and I realized I don't like physics that much. I love math, and I saw one of those late night infomercials that was like, "Hey, you could go flip a house," and they're very attractive. They sucker you in. And when I went to this place, it was this beautiful dream of thinking I could go do this. And as it all started to unfold, I was like, wait a minute, this is very expensive to go learn how to do. And they ended up saying, why don't you just come work for us? So I got sort of this backdoor way to get into this company. And they said, why don't you come learn everything it is that we're doing? And by the way, you're going to have to go do it too. And that was really like the hand-holding method, other than hiring coaches and something along the way. I never dreamed that I would be here doing this, and now I cannot keep quiet about it. I have to let people know what it is that I'm doing. They need to know. And if someone's like, "I'm not ready to hear that right now," let me plant seeds with you today.
Well, that's good. That's fair enough. I mean, you got to start somewhere, and you started first with flipping, I guess, but you went into it with in the working for a company, and then went off and started doing some of your own. I've done a number of flips. Let me tell you, it's no easy task. There's, it's all in. Well, there's so many parts of it that are important, right? Can you find the property before it goes on the market to buy it at the right price is probably the key. The most of the key of the money is made in the purchase if you're buying it at the right time in the right place, and then you have to have a whole team of people to work with. Who's your construction teams, and how do you learn how to get all the permits in time, or end up building stuff you have to tear down later because you didn't get permits.
Right?
There's so many nightmares with flipping that I can see why you ended up eventually, or I'm guessing that might have been why you ended up moving a little bit into the note industry. But tell us how that came about, where you've decided to, or found your way into investing in mortgage notes?
I love this question so much. There is this thing of this mindset that I have, and it's of abundance. There's so much to be had, so much to share, so much information that's out there. And where I tend to try to give back is I end up finding myself at some of these real estate events, even still occasionally. Like, hey, can you come be the expert in the back of our room, the guru, or just like an extra helping hand? And I get the opportunity to pour into people to say, hey, you should flip a house too. You should own a rental. And it was probably about 9 years ago, I was the expert in the back of the room for this event that I was at. And, you lean next to the guy and you say, "Hey, I flip houses. I'm a landlord. What do you do?" And he said, "Hey, I own mortgages." And I said, "What?" I thought I knew what I wanted to be when I grew up, and I was doing it. I was a landlord. I was a flipper. I was a wholesaler. I give back. I'm not a coach necessarily because I don't like to be hired as a coach, but I am here doing what I do. And now you've just created this shift of a paradigm for me that I didn't know something. And he said, "I bet you're a tired landlord." What? Excuse me? No, justify, justify. Like realization hits. You're right. I could be very well a tired landlord. Who is tired? And even if you have a perfect track record of tenants, who's tired of everything that has to come along with it, from the purchasing, the financing, the fixing up, the maintenance, the organizing the bills, the tenant, the wonder.
Finding the tenant that qualifies, and and then hoping he pays the rent on time and so forth.
Right, and then the management, or you're gonna do it yourself, and then the 5 o'clock PM on a Friday phone call that I got was like, "Miss Tiffany, my air conditioner broke," in South Carolina. You can't leave them alone without an air conditioner. Those are things that I could write a full notebook filled with every single page full of the things that would go wrong, and I didn't know that I was a tired landlord. And he said, "Hey, listen, you can get the same or better cash flow, the same or better returns, probably way better returns, if you just owned the paper." And I thought, "Please tell me more. I need to know. Say less, I'm in." And he said, "Here's what it looks like," and started to kind of pour into me. We had a couple of like dinners that were for all the high level coaches that were at this event. And I could not stop asking enough questions. And it was then that I had to go home from this event and tell my husband, "Hey, by the way, I'm going to sell all of our rental property and I'm going to stop flip houses." "What? What?" I had to bring him on board with now this revelation that I had. And there was the pivotal moment of this turning for me that I realized I could have way less effort involved, way more of a system of a process, and just be at a higher level and no longer have to have another tenant, no longer have to have another conversation with a contractor or the city, permitting, financing, all of the above. And it blew my mind because I could do it. And I think if I press hard enough, I learn enough, I know enough people, I can do it. And I've done it now. And I want other people to know you could do it too. You just didn't know what you didn't know. Now there's no more excuses.
Wow. Yeah, that is a good story, and I am a tired real estate investor sometimes myself. I have hired the management companies because I have been the one to be called on my way, just getting ready to go on vacation when somebody's air conditioner goes out, and now I'm racing back to get on the phones to find somebody to go fix their AC while I'm still on my way to wherever we were going. What a mess! It can be overwhelming. And then I've done. Which I kind of like better. I've done kind of like sales of some of the properties I have with owner financing, which I guess is similar to your mortgage note, where I'm the mortgage note holder, and I love that because it's
Yeah.
now they've put up a bunch of cash and they're making their payments, and I still hold the first mortgage on the property. So tell us more. How do you get into it as a whether you're a small investor or a big investor? But I mean, what decisions does it go into? What notes you buy, and where do you even find notes that mortgage notes that you can end up investing in?
These are some great questions you've got lined up for me. I can't wait to answer all of them. I want to shed light on knowing that this is actually a good old boys club, meaning there's not an easy way in. There might be a little bit of education out there for you, but how are you going to go Google this? How do I buy a note? Let me just tell you the the return of the searches on that on Google are so vague that they're like, what do you mean? Like a note for this, a note for that, or uh, the idea of what a note is, even describing more descriptive terms, a discounted mortgage real estate note. There
Yeah, why don't we
really is
start with
not.
that? Let's start with that. What it define what is a what is promissory note investing?
Great. The idea of getting back to the basics. What is an actual note? And we understand what a note is, but until we get to the elementary definition of it, you're like, "Oh, I know what that is, but I didn't know what that was." Imagine that you went to go buy a car and they said, "Hey, would you like a loan on it?" And you said, "Great, I'd love it." Well, you go buy that car and you exchange a term, a length of time, an amount of money for this vehicle. And what you did was you created a note, and it's called a car note. It's a car loan. So, note and loan sometimes are synonymous. And with that, even something as simple as writing a check out of your checkbook, you've created a term. I'm going to pay you this on this date, and it's for this amount of money. The other person's going to take that physical note and they're going to take that to the check to the bank and cash it. So it's just a predefined, written, described agreement for a property or for a car or for a business, whatever it is. You're saying that this is worth something, that there's potential collateral that's against it. And in our aspect of looking at it, the first lien position, which is the loan against the property in of itself, there are multiple terms of what it's called. It could be a mortgage, could be a deed, could be a land trust, it could be several other things depending on the state, the city, and even down into the county. And from there, you're just knowing that you are buying something that is an asset that potentially has collateral. And there are multiple positions of that, but we specifically only like to buy first lien positions. That's the best position that we like.
Right. So most of us probably understand the idea of a mortgage from the property our first home or the home you live in right now, what have you. You have a if you have a mortgage on it, and most of us do, or what have you, your mortgage is with a bank, and you went through this whole long process to get approved, and you had to come up with 20% down or 10, whatever the number was, and now you owe X amount of money for 15 or 30 years to a bank. Now they often sell those, right? We've often seen, hey, you got a new somebody new you got to send your checks to because somebody bought you the paper, and I guess that's where you come in. But you know, again, how did you? Well, I'm just so curious as to how you got into the idea of buying these papers from who, as you say, is the good old boy network. So, how did Tiffany end up in that good old boy network?
One person, one person. And I consider myself to be the next one person. And if you need to know a guy, you know a guy, right? We call everybody dude here in California, 'cause that's where I'm from. So you know a dude, right? Like, we want me, my business partner, the fund, what it is that we carry. Anybody that I know that's in my network, you now know because we're just a phone call away from the expert because they are very difficult to find online, if at all. There used to be several websites that were kind of like a Craigslist or I don't know, like an eBay per se, that you can go and find these. But some of them have turned off their website, they've closed their doors, they've ran out of inventory, and I feel like it's my responsibility now to go and seek this inventory and let people know that I can be a direct place where you can go find this. Because also, if you're brand new to this, you're going to want to have some parameters like, Tiff, I want to buy one. Great. What states do you want to buy in? What county? What's your price range? There's going to be some factors of what we want to do, but also, how do you want to own it? I'm going to want you to own it in a company or your self-directed IRA, your self-directed 529 for your kids, an HSA. Like that's a mind-blowing thing that people didn't know they could have these other tax advantaged vehicles to own these assets in. So it's a matter of finding this inventory and it's sometimes scarce and we're in a scarce place right now. And the only way to find excessive quantity of inventory is by having the money. So what are we
Now,
doing? We are raising the money so that we can buy from larger, like talking in the land of the trillionaire hedge funds into the billionaire hedge funds, and we're playing game with the millionaire hedge funds. And the middle ones are selling and buying your paper between, don't make your payment to Bank of America anymore. Go ahead and write your payment to Chase. They sold your note. Now, we are not buying from Chase or Bank of America. We're playing in the little guys. They were already originated or written up as a hedge fund was the owner, or your neighbor sold your house to your other neighbor and we wrote it on a cocktail napkin. That's a note. And that's a note that's actually an asset that you can purchase as long as you know where to find this inventory. You can send out mailers to source this inventory, or you can just buy from, you could say, institutional people if you have enough money. Now, if you don't have enough money, you just got to know someone that's pooling them together and you can get one, two, 10 at a time. And we want to be a disruptor in the industry for that so that you can come to us and you don't have to really have it be marked up, marked up, marked up. I want to be the Costco for people to be able to go and purchase notes from me in a lower risk manner that's
yep.
already been vetted for you.
So, by the way, folks, that's the easy part of this opportunity with Tiffany is that you don't, I mean, to go through the process of learning everything she does now could take you 7 years like it did her, right? So, with her, the idea is you can, if you've got some money to invest, and we'll talk about how much that typically needs to be to participate with Tiffany's fund here, so to speak. But you put the, you put X amount of money in, and they help you buy or buy into this bucket of mortgage notes where you're getting paid. I would your returns. I'm assuming that's kind of how it works, Tiffany. I'll let you explain more on that early later. But a
Mhm.
couple more questions. Whether you're buying in, like you are with a funds from multiple people together, how do you choose a what's a good note to invest in? Are you is it based on the property? Is it based on the credit worthiness of the particular note, original note? What are y'all looking for when you're buying these notes?
That's a great question. With understanding everybody has a different outcome of what they're expecting. Like, hey, I go buy a rental. I'm going to throw an Airbnb guy in it and I'm going to pay this much in, put this much down, put this much furniture in it, pay my management this, and it's going to be my outcome. And if we crunched all those numbers out, we're going to say, you know what? I'd be happy with 12% return, right? Like, imagine all of that effort and energy that you would get a 12% return on every dollar that you invested into it. Imagine just being able to say, I want to buy that, and then getting 8, 10, 12, 20%. I don't know. There's a certain quantity of people that are going to say, well, I'm doing this because I want the very specific return. And our criteria of what note we're going to be buying is different than someone says, I just want to set it and forget it in my portfolio and I can have it do a longer term method, or I need it really to produce cash flow for me so I can use that as my living expenses. In the manner of putting it into very basic buckets, you can purchase notes that are in good standing and they're decent paper and they're performing is what we call it. It's paying, it's typically on time, it's consistent. Now, we don't own the ability to see into the future, but if we were to base past history on what we would expect to happen in the future, we would expect that to continue cash flowing. And those are performing notes. The other only other bucket to be able to put it into as a broad category is a non performing note, meaning they have missed at least 91 days of payments and they are in a status where hey, we need to do something about it, right? We need to get them caught up. We need to rearrange this and that, or we need to foreclose on them. There are a lot of other middle things in between that, which I love that I have a heart in this where I want to help people get caught up first or help them rearrange the details, lower their payment, lower their interest, get them government funding to be able to get them caught up. There's so many different things that we can consider on this non-performing side. There is a lot more risk though. Not a ton, but just enough more risk that you're like, well, I'm not going to be counting on income from this side of that bucket. So if I don't need the income right now and I have the ability to put a little bit into this note, maybe put a little bit more with a couple of attorneys and documents, we're talking like a couple $1,000s. Or maybe we got a couple of $1,000s of back taxes, like whatever that number looks like, all the way up to like, what if? And that number is still way lower than us just knocking on their door like a foreclosure specialist and saying, "Hey, I want to buy your house for all cash today." Well, you're still going to have to pay off that loan. Imagine if we could just go and negotiate with the lender, and the lender is going to pay us less than what they even owe their bank. And so our risk is inherently lowered because of what we're buying the asset for. So if you're saying, Tiff, I want to own something that's performing, great. I love buying almost in all the states. The states I don't like buying in are the ones that are very difficult to foreclose in. And that's when we start getting into like, all right, what state is a judicial foreclosure and what state is a non judicial foreclosure? And what states are in this there's even a list you can Google, how quickly do states foreclose or how quickly does that process take? And I can sort the list from the number of days it takes to foreclose on a property. So it's like, I love Texas, right? Let's get someone out the door in under 90 days. They mean business in Texas and they are very swift moving in it. So if I have an asset there, I'm comfortable with it being performing or non-performing because we can kick butt and take names, right? Or I can help them out. And if we're looking at non-performing assets, there's certain rules or ability for people to stay in it longer, or redemption periods, or just like the quantity of number of years it's going to take. Can my portfolio absorb that number? Can I wait around for 3, 4 years to collect on something I know I bought for pennies or cents on the dollar? And that's actually where it starts from. What do you need this to be? And then we can determine what then the inventory looks like because it's changing daily, weekly, monthly. So you tell me I'm on the lookout, keep my eyes out for this. We keep an eye out for it. We love Texas and we don't really love New York right now. We're not in love with Florida stuff. We're not obsessed with New Jersey, right? Like there are some great deals to be had there as long as you know there are risks associated with it. And if we can tolerate those risks, we buy them for even less cost and it mitigates that risk for you.
Wow. Hang on a moment. I got some folks. Hang on a second. I got some great questions to follow up on that. And a shaky economy. How do these work if there's a downturn in the economy or a downturn in the housing market? So don't go away. You're going to hear from Marketing Boost, and we'll be right back.
It's time to wow, surprise, and impress your clients with the most powerful customer draw card available anywhere. The Marketing Boost Solutions Show is brought to you by Marketing Boost, where you can get valuable travel and restaurant incentives to drive your leads from prospects to paying customers. Now you can offer complimentary hotel stays in over 130 destinations worldwide. Go to marketingboostsolutions.com and try it for free right now.
You just heard from marketingboost.com. If you're not already a member of Marketing Boost and you're a business owner, you got to go check it out. Learn how you can use travel incentives to wow, surprise, and delight your clients, and use our incentives to generate more leads, close more sales, and generate more revenue. Bottom line. We're back with Tiffany Alexander talking about how to invest the money you make with your business in the mortgage note industry, how to do it yourself and or join a group like hers that makes it easy. Tiffany, if I was doing this on my own, buying mortgage notes or what have you, one of the fears that comes to my mind is, okay, like 2008, huge, and there's plenty of people say there's crashes and burnings coming in different states around the country as we speak. California, with all these fires right now, is probably looking at major drop in prices of properties through across California, with fire insurance being nearly impossible to get and so on. So as these downturns come, what does that do to the mortgage note industry and the note holder? And the last time we spoke, before a week or so, we talked about this show, you mentioned that could actually be a huge upside opportunity. So kind of tell us about that and how that works, investing in notes.
It's almost the saying that they teach you in any real estate seminar or real estate guru that they're going to tell you. It's always a good time to buy when you buy right. right? If you could buy for 3 cents for $1 billion property, right? Like it's you're buying it right. So you can't really go wrong with that unless, from here you get to decide, well, what am I really willing to tolerate? What's my risk? And if we're buying for cash flow and we're like, hey, I need to buy this asset because I need 1,000 bucks a month coming in. And I buy a cute little house here in this state and it's putting that cash flow out and I'm getting that. And something happens in the economy, a hiccup, a crash, a something, a disruptor in this. There are some key features that you can use to mitigate your risk to decide which notes you'd like to buy individually by identifying the neighborhood or the city as seeing that for them to stay in their property, it's actually cheaper than for them to go rent an apartment down the street. If your mortgage, cute little house in Ohio is 500 bucks, but it's 900 to go rent an apartment, it's cheaper for you to stay in your house than it is for you to say, I'm out. I want to leave this house. I'm just going to go rent. Well, you can't. If you can't afford 500, you're not going to be able to afford 900 for rent. So there are some factors like that that are teachable that we could create a buffer around what assets we want to get into. But my favorite thing to understand is what is the worst case scenario? Like what happens when all this goes wrong and I'm buying this asset or I'm buying this asset? The way that we're going to be able to make sure it's at least going to break even or we want to have a strong return on it is finding out what's the price that we can buy them at. Can we buy them this price here and this price here because we're going to need to put some money into it or we're going to need to put a few bucks into it to maybe clear up the paperwork? And what happens if we bought this cute little house, it's performing, and then all of a sudden they stop paying? I'm not even mad about that because they typically put a down payment. They've been paying for so many years. They've got whatever the interest rate is, and maybe they just stop paying. And I didn't want that to happen. That's like what feels like worst case scenario to me, but it's actually not worst case scenario because I can get them paying again. I can help them out. I can reduce their payment. I can reduce their interest. And worst case scenario for me is I have to maybe wait a few months to have the foreclosure process go all the way to the point where I would now take the house back. And if I'm taking the house back for even way less than what they owe the bank in the first place, that's making the risk better for you because I'm not going to want to buy that house at full value or even a little bit of a discount or even a wholesaler saying, "Hey, I'll buy your house for exactly what you owe." No, we're buying these for a lot less than what they owe even directly from their lender. And that's where it makes sense because we could buy houses half off and it's still probably going to be okay. And we're not really buying stuff right now all the time in California where stuff could go half off. We're buying more in the middle of the country where stuff doesn't have these sharp spikes whenever the economy goes weird.
So, who is this for? What type of person should consider doing this or shouldn't?
I love that. I love that. Everybody needs to understand that there are alternative ways to invest. I don't care if it's the stock market, it's Bitcoin, it's foreign currency, it's collecting stamps, buying gold. This is the idea of opening up your mind and planting a seed of saying, "Hey, this is on the roster of the availability for you to consider as a method for you to invest." Now, you can find notes sometimes for like a few $1,000s, but do you want to own an asset that's only worth a few $1,000s in the middle of Ohio, right? I don't know. Maybe middle of Iowa, right? It's on a barn on a no name road. No, no, no. Let's get into some inventory where we can have at least like 40, 50, $60,000. I like the 80, 100, $150,000 range where we can buy someone's first lien position and then we're seeing that, hey, they only owe this, but their house is worth this. They've made this many payments into it. So our risk is lowered in all of this. Um, it's it's just a little bit of a homework away if you know how to homework it up right. I do have a friend, a dear friend that is getting ready to publish a book, so I'll keep everybody posted on that so you can get really like some nitty-gritty ins and outs to be able to get the straight facts whenever you're getting into making a decision to do this. But someone that's identified, oh my gosh, maybe I am a tired landlord. I didn't even think that that was a term. But even you said, Margot, like I didn't realize I was a tired landlord, but trying to chase down a tenant, pick a new one, my management company, the repairs on Friday at 5 o'clock that hit you, those make you a tired landlord over time. And if I could show you how to create the same cash flow or even create it as a note, right? This is not just the note space that we're talking about. We're talking about creative financing now to the point that if I said, why don't you sell that home to your renter and you create some distance between that. So now you're the bank or you're a version of a lender to them, and they're just making payments. So you've cut yourself out of the necessary repairs that the house is going to need.
Yeah.
There
Yep.
are,
Yep.
I think everybody should at some point consider to do something other than just what you're doing right now to add to your portfolio. So no one's off limits. And you
Right.
can do this early, meaning you could do this in a kid's 529 when they first get started too for very little. It's going to be more efficient if you get started with at least a medium amount of money. And some of the people that tend to fit themselves into this bucket right away are like, gosh, I'm sitting on some money in my savings account that I don't really need. Or, hey, I left my company and I've got this 401k. I really need to roll over to something, right? I shouldn't just let these guys continue to feed me to death, let it sit there. Roll that sucker into some sort of self directed IRA, which I have a lot of really great contacts to give you a variety who you need. And let's go move it into something that can set it and forget it. Or you want to do a little bit elbow grease to get a stronger return for you with a little bit more risk.
Now, one of the things that's always confused me with your cash flow projections that you offer some of your investors, and I don't remember the numbers, but let's say it's return of 8%, or is that, well, tell us what is, if I was an investor in your a firm, what do you typically attempt to promise, or how is the investment payback?
Well, in our fund, if you're thinking to yourself, gosh, I want to be involved in this, but I don't really want to go run out and learn how to do this and own my very own asset, just own one or two. I want to mitigate my risk by letting someone like me take control of it. We put it into a pool, a portfolio, so that way it's cross collateralized. So if one asset suffers, not all of them are going to suffer. This asset's going to do really well. And that means you could just take what I like to call a backseat position. I'm driving the car. You can see through the windshield where we're going, but you're just hanging out and letting us drive where it is we're going with the with the assets that we're purchasing. And from a minimum standard that we like to have in our fund is $100,000 buy-in. We really prefer 250,000 to the $1 million range right now for our next clients. The SEC does define a accredited investor as someone who makes $300,000 a year if they're married or $200,000 as a single person. And that's the minimum requirement for someone to get into the fund with us. And what you would want to do is stick a toe in, come on in. And then when you graduate out of it, we can have you set up with maybe your own portfolio that you grow in that comfort of wanting to have on your own.
So one of the doubts, or questions I have rather, is, for example, if you say, okay, you ought to be earning about 8% return, I'm guessing, is that a fair number, or what is the number that?
Yeah, that's
Okay.
a fair number. So if you
Oh,
wanna go crush it yourself, you should be wanting to not wake up for less than 10 or 12%, right? But if you just wanna say, "You know what? You go do it for me." Like, if you go tell your bank that, "Hey, will you just help and carry my money for me?" Well, yeah, they're gonna put it in a like, I have a savings account, it's 0.01, and I have another one that's 3, right? So it depends on which bank that wants to give you the money. So if you just say, you do it for me," it's the least amount of effort, least amount of energy. You maybe might be getting so many percent, right? I want to double, triple that and have the same amount of low risk and the same amount of like, just hand it to me and I'll get you a good return. Our returns start at the 6% range, but I prefer to pay like in the 8 and 10% range. And that's going to determine like where and what your portfolio is going to do with us.
all right, cool. So 6%. So if 6% is the return, and some of the mortgages you might buy are, they have a mortgage and their interest is at 5.5, 6%. How do you how do you promise to pay that 6% to the investor? And when the note, the mortgage holder, I mean the mortgage payer is paying at 6%. So share us how that math works for the investor.
This is a very common question that we get because it doesn't make sense if you don't know like the depth of it. If we were to buy, and I like to throw numbers at it, it may not make sense if you like, I could totally pull out a notepad right now and we could crunch numbers. Someone owns a cute little house, they owe their bank $100,000 and their mortgage is 5%, right? And they're making, I don't know, I'm gonna round up, $1,000 a month payment. If we buy that deal from their bank at $100,000, our effective return is going to be the number of what the percentage is written up, maybe even a hair less because we've got $20 a month fee to service it with a debt servicing company. So that would be our return is 5%. And how we get our yield to bump up is by not paying 100,000 even for that note that's worth 100,000. Their property may be worth more, but this is what they owe. And the more that we tick down on the price that we're paying for that asset, the greater our return ends up being. So it doesn't look like a cash on cash return like we've invested all of our money, we get all of our money back. We actually invest all of our money, we're buying debt, and we're getting little tiny payments back. So it's called a yield that you can get on your money versus calling a return. It's kind of like idiosyncrasy of it. And the way it works is by buying it for way cheaper, which nets you a stronger return versus just saying, "Well, they owe 5%. I'm gonna get 5%, right?" No, it doesn't work quite like that actually.
because you bought it for 70,000 instead of 100,000, or you bought it for 50,000 instead of 100,000.
There you
And
go.
and so, okay, you're still getting the payments on the 5% of the 100, but because that's what they owe, but you bought the paper as the bank was, or whoever owned the paper was just trying to move it for whatever reason. And
Mhm.
they've already had the first 5 years of all interest payments or what have you, so they can afford to drop it and sell the what's left on the note for less than what's owed, so to speak. I
Yep.
imagine. Correct?
That's it, right? Imagine, like, just taking a peek back, like, that $1,000 a month payment, like, $42 of it is principal, and then the rest of it, $960 is all interest. So they've made so much of their money in that first portion of the loan that when they go to sell it to me, they may have even made all of their money back, and then there are really fun, ways to calculate how they've adjusted if they need a loss or if they are like, "Ah, I'm just done with this." You never know. Probably any excuse that you can come up as a reason in your head is a reason they could be wanting to get rid of this portfolio. Even
Hmm.
sometimes banks are like, I don't want to be known to foreclose. Like I'm negotiating with a bank I'm meeting on Friday. Hey, we don't want this portfolio because they're in default. We just don't want to be known for foreclosure. Will you go ahead and buy them from us at this price and then you foreclose on them? Like, sign me up. I'll take it. 'Cause I can
And
maybe get them squared away and get them back performing again, and now the loan is not worth pennies on the dollar, it's worth 70 cents on the dollar.
how often does that happen? So, I mean, you would think you would, if you offered the opportunity for somebody who's in default and in foreclosure, to say, look, we're going to essentially forgive that the fact that you're 6 months in the arrears, and we're going to put you straight with making payments starting today, and whatever arrangements you make, we'll knock a half point off of the interest you were previously paying. And now you got a new 30-year mortgage for the balance of what's left, I would imagine, something like that. So you end up with, making the interest on top of, at because you're taking it to a whole new 30-year mortgage or what have you, or not.
Right.
Is that kind of what you might be doing? I'm just thinking the opportunities.
I could easily tell you the way that we get to invent up things to help out homeowners is much like the move or the show Whose Line Is It Anyway? The rules are made up and the points don't matter. So if you're thinking, Tiff, how is this guy gonna pay next month? I don't know. The rules are made up and the points don't matter. Can I help them? I will do my best. Are there limitations? Occasionally here and there. If we want it to be Dodd-Frank compliant, that, the certain rules and guidelines, even to protect myself, I should set some boundaries. All right, well, if you default again, I'm going to have to foreclose on you. Or I'd love to forgive some of your debt, but I need you to make this kind of a payment. And the ability to move in a fluid motion to help someone out is actually greater with someone who just owns a couple or just owns a few hundred or a few thousand versus someone that owns 10 million loans, a million loans. They are unwilling to let one person make that allowance with one client because then they have to bend for everyone else. Whereas
Mm.
I'm willing to bend with any of the clients that I'm doing business with, but there are statistical anomalies that's like, man, if they haven't been paying for like 2.5, 3 years, the likelihood of them saying, "Yeah, you know what? I think I'd like to start paying again," the chances get way, way lower. So we have to understand and wake up to like, okay, if they're 2 years behind, we may have to foreclose on that. And so that
Yeah.
is the last option that we may have to choose, but it's
They're
still off
probably
the
smoking
table.
meth every night, and so they're not going to start paying.
I had a guy one time that just said, "I don't really wanna work ever again." It's like, "Well, you can't stay in your house if you don't wanna work ever again. I'm gonna need you to pay the payment." It's just like
Right.
a guy that didn't wanna work. So, I've heard the most intense, insane, left, right, plain stories, and it's like, it's a mixed bag whenever you decide to get into this stuff.
What a craziness. When we come back, we're going to hear about some of the biggest, at least I'm going to ask you what has been one of your biggest mistakes that you may have made in this industry you can guide us on. But right before that, we'll hear from Automation Booster, and we'll be right back. Don't go away.
Is your business on autopilot yet? Do you have automation in place to capture, nurture, and convert prospects into clients via email, SMS, ringless voicemails, appointment setting? Get all the inbound and outbound marketing tools in one place. Go to marketingboostsolutions.com for more on automating your business so you can make money while you sleep.
You just heard from our sponsor, automationbooster.com. If you're in business and you don't have everything automated, if you don't have a CRM that's helping you relax while your systems work automatically, send emailing, auto responses, your calendars, your text messaging, your ringless voicemail broadcasting, your funnel builder. We have it all at automationbooster.com, and it includes dozens of sales funnel templates with marketing boost incentives built in. So you can get it all for 97 bucks a month at automationbooster.com. I've been an internet marketer for since 1996, before Google, before Facebook, and I've never seen a product as robust and as affordable as automationbooster.com to help you build your business. So go check it out. Back here with Tiffany Alexander talking about investing in notes, promissory notes. Tiffany, what was one of the biggest mistakes you made early on, and that for those of us getting in, attempting to do this on our own or working with you, what should we avoid? What lessons did you learn on the negative side?
I'd say the biggest mistake that someone could make is complacency, meaning, this person stopped paying. I'll just wait around. Like, you have to take action. You have to let yourself not do a DIY method, also. A very large mistake someone could make in this space is saying, you know what? I think I want to be the debt collector myself. I'll just go ahead and call them up for those payments. We'll figure it out. Zelle, Venmo. That is a terrible mistake you can make. You actually have the ability to step into the shoes of working with someone that's kind of like a property manager, but it's actually a debt servicing company, and they're about 20 bucks a month. So imagine you have a rental property, it's $1,000 a month. The property manager is going to want 10% of that. That's 100 bucks. So already if you have a note that you're collecting on that's $1,000 a month, you're saving $980 on just switching from the idea of I need to have a rental versus I just want to own their debt. I want to be their mortgage owner, their bank. Being able to have someone do this for you keeps you compliant, keeps it automated, which we know automation's incredible and powerful, and keeps someone else on top of them and provides a platform for them to pay you. And you get ACH the money 24 hours after they make their payment. It would be insane to say, I would want you to get into notes to do the DIY. I'm going to do this myself method. You have to start right, start proper, and you have to compensate for knowing I'm going to pay someone 20 bucks to handle this for me. So we pad those numbers in always because it's an always factor, even though it could be something you could do yourself. Never do something like that yourself.
And even starting up on your own, I mean, let's go back to the example I gave. I'm, going to be the mortgage holder myself and do a for sale by owner. I can get that type of debt service company for 20 bucks a month.
Absolutely. There's even ones that go down to like 18. Some are like $100 a month, but the run of the mill is about $20 that you would want to pay for a great company. Now, every company doesn't service every single state, so you have to maybe make sure which ones are licensed debt collectors in the area. And they're going to want to be licensed debt collectors because when the payments don't come in, they're going to start calling and knocking for you to say,
and
"Hey,
and
we
yeah, they
need
got
that."
and they got to do it by the book because there's rules on how they chase down the debt. And I have that with one of the with the properties that I'm doing that way, but I didn't. My realtor set it up that way for us, and so it was
Yeah.
like, okay, perfect, wonderful. Um, but cool. So describe in your industry. Uh, I mean, I guess well, I'll let you keep going. Keep telling us more about the opportunity. And you said we need to, you're looking for folks with 100 grand or so to put in minimum. And we do. If someone did that, what is the process? When do they start to see? How do they? When you're investing, they're buying into multiple properties, or they're getting their own under your umbrella. Uh, what are they getting for their investment?
I would really love to get to know every single investor that comes as a client into our fund. One of your first steps is going to be a little baby education. You're going to go right over to YouTube and you're going to type in Aspen Sage Investment Fund or Tiffany Alexander, and you're going to find, well, you might stumble onto my podcast or you stumble onto Aspen Sage Fund. And in there are some 4-minute cartoons that are like, hey, what's a note? Or hey, can you crunch some numbers for me? What's a note look like if I own that versus owning a rental? Or if I own that versus flipping a house? And if you can't sit still for 4 minutes to listen to a couple of cartoon videos, you've already disqualified yourself. You don't really probably want to have a half-hour conversation with me. But if you can make it through a couple of those videos and you've opened your eyes to the idea of knowing, hey, I actually do want to invest into something like this. My next step would be have you go right to our website, aspensagefund.com, and click on the contact us button so you can take a half hour with me and we can get to know each other and make sure what your portfolio is doing. Is this a good spot for you to be in? Are you qualified to be into doing something that we're doing? And are you in a spot where you're not like, oh, I need to put this in and the I need it right back out of us. I need it right back out of the fund because you're gonna set it in there and treat it like a CD, right? You're gonna have it in there for a certain amount of time, and if you need it back out, you can let us know. And we do have a full pitch deck if you wanted to see, hey, what is the trajectory of where we're going, and what do the returns look like depending on where we're going, and what does that feel like for you to see where do I put my money and what are you going to do with it? And what's my return and how do I get out of it? You can click on a couple of our YouTube videos too that describe exactly what that would feel like to be a client.
Great. I'll pull up your YouTube channel as well. By the way, all of the links to get a hold of Tiffany and all of her LinkedIn page, her YouTube channel, her the website we were just looking at is all in the links down below. Please, if you have any comments or questions, jump them right in there. Tiffany will get back to you within those comments on her YouTube channel as well. So we're here to help. And let's take a minute. Let me see if I can find some of these links that you gave me to share. And I
Yeah.
will, let's see, was it LinkedIn or YouTube channel? Probably. Let's take a quick
Yeah.
glance at that. And back in here to share my screen. So here we are on her YouTube channel, Aspen Sage. Go to youtube.com/ at Aspen Sage. And boom, all kinds of content here with podcasts she's been invited on and her own podcast that she's launching soon. Or did you actually launch your own podcast
I
already?
I did. End of 2024 we launched that and we are if somebody wants to share their journey, they have an incredible story as a business owner. I'd love to host anybody to come on so that I can promote you and your awesome thing that you're working on as well.
Wonderful. Well, Tiffany, it's been really enlightening. One, congratulations on your success story over the years, growing and from a flipper to having a quite a big portfolio of mortgages that you now acting as a bank yourself.
Right. And I want to bring everybody with me. So let's start planting those seeds. Let's see what baby steps you can do next. And if it's not now, it's when, right? So it's not a matter of like, I can't do that. That's not my thing. Yes, it is. Let's figure out when it's going to happen to you.
So, with that said, one more quick question. You come in as an investor in your portfolio, your fund, but then as a part of you can begin to learn how you might make deals on your own and buy your own note or what have you. Is that part of what ends up happening in the process, or mostly people just kind of keep putting more money into the fund?
I'm always going to be an encourager to say, hey, do you want your own portfolio? I've got a couple of killer deals that I've got picked out for you that would be a nice step for you to own your own assets. And sometimes you just get comfortable with knowing, oh my gosh, Tiffany's doing all the work, all the effort and energy, and she's giving me a killer return that's double, triple what my savings account is getting. They get sort of like comfortable in the idea that I'm just going to let it sit. And
All right.
what we're going to have is we're growing a website right now where we can put inventory on it that people could have access to. And so it's a matter of, hey, what does that look like? And that's going to actually start to involve some education with saying, this is what you'd want to do. Watch out for this. And so as we start to take some of this out of here and we put it into some more videos, you'll notice that. So when you go subscribe on our YouTube channel, you'll be the first to know about the more things that we want to pour into you and out of our head from what it is that we've seen people do, the experts are doing right now, what's working, what isn't working, and what you could start to do with your portfolio next, whether it be with us. So let me also be a neutral third party. If you just want to get ideas from me and I can plant that seed and you can decide what you want to do next, it doesn't have to be with us. I'd like to just take time with you to get to know you, and maybe I can introduce you to the next investment you want to do and it wouldn't be us. That's okay too.
Cool, Tiffany. Thank you so much for sharing your story and all about your business. And it's an enlightening idea, guys. If when you start making money with your business, you've got to find ways to invest it. It doesn't make any money sitting in the bank. So you need to put it into, obviously, real estate has been around for a long time. It's a great, investments in real estate work, but they are work. And so investing in the mortgage note sounds like a easier solution, especially when someone like Tiffany does it for you. So check her out. All the links are down below in the show notes. Go check it out. Give us some comments. What you don't forget to subscribe to the show. Share this with any other entrepreneurs. We'd really appreciate that. And give us your thoughts or review of the show. And so thanks again, and we'll see you on the next episode of the Marketing Boost Solutions podcast. Thank you. Thanks for listening to another episode of Marketing Boost Solutions Podcast with your hosts, Captain Marco Torres. Now it's on you. Take the next step now. Go to marketingboostsolutions.com for more on how you can wow, delight, and surprise your clients with the most amazing draw card on the planet. So stay thirsty, my friends. Stay thirsty for knowledge. See you next time.